Good morning, everyone. Good morning, everyone.
Good morning, sir.
How many of you are here? Then, so we'll start. Can you see the screen? Can you see the screen?
Yes, sir.
Yes, sir.
So we'll quickly today wrap up. From where we had stopped. We'll just quickly go through it because there's a lot to cover up in this. So we're talking about a very important term called as Sensex. So what is Sensex? Basically, Sensex is nothing but it's an index. Okay. Again, I'm coming back to some basic things. What is an index? An index is nothing but it's a parameter, it's a yardstick, it's a benchmark to note whether your stock is moving in the right direction or is moving in the opposite direction, right? If you want to really know this, or if you want to compare the performance of your stock with any other thing, you need to have some benchmark, and for that benchmark it is necessary that we have to have one measurement scale. And this measurement scale in all the stock exchanges is generally indicated by the word as index. Now what is an index? Index is nothing but a collection of good shares in that particular exchange, okay, depending on a variety of classification criteria, and the top shares have been selected and a base value is been created, and through that particular base value we will keep on checking whether our stock has performed well or it has underperformed compared to that particular index. So this is how the brief history of index talks about. As I said, the significance of it, it's a yardstick, and it is very important parameter to know whether our portfolio is doing well or it is not doing well, right? Now, as in India, there are a couple of indices. The most widely followed are the two, that is Sensex, which consists of top 30 shares traded on Bombay Stock Exchange, and Nifty, the top 50 stocks traded on National Stock Exchange. So depending on that, the Sensex of the two stock exchanges is been constructed. Okay, I will go to how the Sensex got calculated, what was considered, and what how is it made. So what happened is they decided that now, I'm talking about 1979. The people in the stock exchange decided that as a result, there are a lot of companies that are getting added on day-to-day basis in the Bombay Stock Exchange, and we cannot really monitor the performance of all these companies. So what did the authorities do of Bombay Stock Exchange? They collected a group of 30 shares based on certain criteria, and they said that we will calculate a value for this. We will calculate a value for this, and based on this particular value, you compare whether your share is doing or going along with these particular indices or it's going away from this particular indices. So that is what we have to compare, and for that reason a calculation method was adopted, right? So one important word that you can find out in this, that the method adopted for calculating Sensex, okay, the method adopted for calculating Sensex is called market capitalization weighted method. Okay, now, what is market capitalization weighted method is, I will tell you when we come to that particular slide, but it is nothing but you have some shares with you, okay, you have some top 30 shares that they have selected, and then they have taken the price of that particular share depending on the number of shares that are traded. They multiplied number of shares into price and they got a value to it, okay, and for that value they assigned a certain clause, and that based on that the weights were assigned. I will show you that particular calculation when we come to it. Not only that, I will show you today in the live market how the weights have been decided. Okay, so we'll come to this particular calculation a little bit later. Next, once the Sensex was computed in 1979, okay, they decided that whatever answer that they got, they assigned that particular answer with a particular value. So in those times, they said that whatever calculation that we have done by using these 30 shares, we got some value out of it, and the value is quite big enough. We cannot, take that value on day-to-day basis. So what we'll do, this particular value, we will assign the value as 100. Okay, so why the base value is set to 100 is, just if you have, you can just look at this, the total shares the total value of shares in the market at the time when when the index was constructed was assumed to be 100 in terms of points, and this is the purpose of calculation of index. So we'll come to it later as to how do we calculate the percentage growth and other things. For the simple reason, we can you keep on hearing on day to day basis, right, that the stock market is up by 2 points, the market is down by 5 points. What does it mean? It really means that compared to yesterday, what has happened to the market today is what we need to understand. For simple calculation, I'm just giving you, let us suppose we go back in 1979, and on that particular day when the Sensex was calculated, we all were there, and we assigned a value of 100 for that particular calculation, that whatever we arrived. So we did some calculation and we arrived at particular value. Okay, let us say that value was 10,000 or 20 lakhs or whatever might be that value, we assign that value is equal to 100. Okay, so 100 is considered as a base point or base value. Now if next day if this particular 100 became 110, what can we say? That the market has moved up, the market has moved up by 10%. Daily you keep on hearing in the stock exchange, right, that the market is down by 3 points, market is up by 7 points, it is down by 15 points. What is this? It is nothing but compared to yesterday, okay, what is the value of the market today? That is what it talks about, movement of up and down in terms of indices. Again, I'll come to how do they calculate it, and when is it calculated, all these things I will just let you know. Okay, in the meantime, this is next slide that I want you to go through it. Okay, these are the top sorry these are the top 50 shares that are traded on Nifty, and these are the top 30 shares that are traded on the Sensex. So these are the top 30 shares considered by the Bombay Stock Exchange to calculate the index, and these are the top 50 shares considered by Nifty to calculate their CNX Nifty. So if you find some shares are getting repeated here and there, why? It is because these are well established, well known companies, and that is the reason they have a huge market capitalization. We'll come to it, what is market capitalization, at a later stage. Okay, but just look at this. These are a list of all 50 companies that are there in the Nifty 50, and these are the top 30 companies that are there in Sensex. Okay, so just look at the number here. It is 30, and here it is 50. So that is what you need to understand. So it consists of top 30 shares. Here it consists of top 50 shares. Is that clear? Next that I want to show you, sector wise, if you look at weightage, major importance is given to, just look at this. Major importance is given to banks. Banks contribute around 26.1% of the total index. Okay, so banks contribute a major source. Next, followed by bank, we have IT and software. So the green part or the green triangle that you can see, that is a major chunk as far as Sensex is concerned. Next, so first is bank, second is IT and softwares, third comes to oil and gas, the energy sector, what we call it as. So this contributes around 17%, and then followed by the housing segment. Okay, the Housing Finance Corporation of India and all those things come into this, and other things are all related in the entire this particular area that you can see. All other things are related here. So we have two-wheelers and three-wheelers, car and utility vehicles, okay, general financing, furniture and fixtures. So many companies come into this particular segment, but if you look at their percentage is very, very minimum. But if you look at this percentage, this is where the major sector contributes. Clear? Now I'll show you the live market as to how the Sensex has been determined. Okay, I'll just stop sharing this. I'll take you to the new screen. Okay. Can you see this now? Are you able to see the screen?
Yes, sir.
Yes, sir.
Now, this is a list of top 30 BSE companies. Okay, so whatever company I showed you, the same thing, but only thing is I'm showing you live here. Okay, so these are the list of the companies that are available, top 30 companies that we have. Okay, these are the sectors in which they come. Say, for example, Axis Bank comes under banking sector. Okay, Bajaj Finserv, Bajaj Finance, Bajaj Finserv, they come into the finance sector. Bharti Airtel comes into telecom. Okay, so like that we have the industries. Now, we are trying to understand what do you mean by market capitalization. Okay, So just pay attention to this. What is today's price of Asian Paints? One share of Asian Paints. What is the price? The price of one share of Asian Paints is 2067. Are you able to see that?
Yes, sir.
Okay. So this is the price as of today. Compared to yesterday, by how much percent is the price has gone up? The price has gone up by 2%. What is 2% of 2067? Can anyone tell me please? What is 2% of 2067?
41.34.
So compared to yesterday, the price has gone up by 41 rupees. That means what was
41.
yesterday's price? Rohin, can you tell me what was yesterday's price? It is 2067 minus 41 rupees. How much is it? 2067 minus 41 rupees. So is it
2026.
2026? So yesterday
Almost.
the price of
Yes,
Asian
sir.
Paints was 2026. Today the price of Asian Paints is 2067. So it is up by 2%. Are you able to understand? This is what it means. Now, these are the number of shares that are available for trading. Okay, number of shares available for trading in terms of million. Okay, so don't worry about million and other things. Just write down as M. So now I want to calculate what is my market capitalization. How do I calculate market capitalization? Market capitalization is nothing but, okay, the price of the share into number of shares. I repeat, price of the share into number of shares. Whatever answer I get, that is what we call as market capitalization of that particular company. Okay, we call it as market capitalization of that particular company. Now, number of shares means there are some percentage of these are the total number of shares available. Now, all these shares are not available in the market because the company is holding, the directors are holding, the promoters are holding some of the shares, right? So this is what we call as full market capitalization. Okay, whatever answer that you are getting here, this is called as the full market capitalization. Are you able to understand? There is something called as free float market capitalization also. Free float means total market capitalization minus the number of shares held by the promoters of the company. Okay, the number of shares held by the promoters of the company. When you subtract that, whatever shares are remaining, that is called as free float market capitalization. For example, let's say Rohin is a promoter of a company called Asian Paints. The total number of shares that Rohin has, or the total number of shares that Rohin has issued, is, let us say, 100 shares. Now, out of 100 shares, she has kept 20 shares for herself, right? So she has kept 20 shares for herself, which means how many shares are available for people like you and me? How many shares are available for people to trade? There are only 80 shares available for people to trade. So we can say that these companies, the Rohin's company has free float number of shares to the tune of 80 shares. So 80 shares multiplied by the price of that particular share, we get free float market capitalization of that particular company. In this particular case, I'll just explain to you. This is a total market capitalization of Asian Paints. Out of the total market capitalization of Asian Paints, 0.5 number of shares, okay, 0.5 million shares are held by the promoters of the company. So if 0.5 million shares are held by the promoters of that company, what are the shares remaining? Whatever shares are remaining, that is what we call as free float market capitalization. Clear? Next, in terms of weightage of the entire index, this is the total weightage of the entire index. How much is Asian Paints having a weight? It's having a weight of just 2.1%. Okay. What are the earnings of that particular company? The earnings of the company are 23,300 million. That is the earning of that particular company. This is EPS. Can you tell me what is EPS? Can you tell me what
Earnings
is
per
EPS?
share.
What is EPS?
Earning per share.
Earning per share. How do you calculate it? Total earnings divided by the number of shares. Okay, total earnings divided by the number of shares, you get earning per share. So a share of, whenever the shares of Asian Paints were issued, the price of the share was 10 rupees. Okay, so if you pay 10 rupees, now what is the earning per share that you are having? You are having a earning per share of 24, which is good, right? This is called as price equity ratio. Okay, price, not price equity, it's price earning ratio, PE ratio. Okay, so higher the PE ratio means that share is not expected to go hereafter. That means the share has reached its peak. Now it will not go beyond that. That means there is a very limited number of limited amount of growth that we can expect from this particular share. So this is how you basically need to analyze the shares of the company, and then we can come to what do you mean by free float market capitalization or overall market capitalization. All these things calculations are being seen here. If you want to know how has the Sensex performed, you can easily switch to the graph. Okay, you will get the graph of the Sensex. Okay, so just look at this. Yesterday was 4th October. Last year 4th October 2019 to this year 5th October 2020. I am taking 1 year time span. In the last 1 year, how the Sensex has gone up. Okay, this is here Sensex has fallen down. This was the peak of lockdown in India, 23rd March. Okay, when the lockdown started, all of a sudden the market crashed, and then it has slowly started picking up. Clear? If I want to know what happened in the last 3 months, I just click on the last 3 months. I'll be able to. You can easily tell me what has happened in the last 3 months. If you want on last 6 months, last 6 months data is also available. So if you compare from last 6 months, the Sensex has continuously grown. You can see the trend here. It has continuously gone up, which means if you had purchased shares somewhere here, today the value of your shares would have been somewhere here. That is what it means. Any doubts in this understanding? Clear? So this is what we have to understand as far as the computation of the market capitalization. Again, I am going to come to it in a very practical sense. This was a live demo that I showed you. Now I'll come to how it has been actually done. Okay. Now we are going to construct an index. Please keep a pencil or a paper in your hand. Okay, because you need to understand how I'm doing this particular calculation. Okay, please read through this. Again, I'm saying this is a demo that I'm going to tell you how Sensex is calculated. Okay, we cannot do for all the 30 companies. I have just chosen 5 or 6 companies for you to help you understand. Okay, how do we need to go about as far as computation of index is concerned, right? So just look at this. Pay attention, because this question often is been asked in the exam. Assume that there is a company A that has 1 lakh shares, okay, outstanding, and company B has 2 lakh shares outstanding. Hence, the total market capitalization is, okay, 200 into 1 lakh and 150 into 1 lakh. Now, what are these? 200 are nothing but, okay, these are the number of, this is the price. So total market capitalization is 500 lakhs. Okay. Now, whatever answer we got, we will equivalent this to as 100. We cannot remember this 500 lakhs because the amount is too big to write. So what do? So we got this 500 lakhs. We will say this 500 lakhs is equal to 100 points. Okay. Clear? Next, let us say tomorrow the price of A, that is share A, hits 260 rupees. Here the price of the share was 200 rupees. In 1 day the price has gone up by, it has hit 260 rupees. That means there is a 30% increase in the price. And the price of B has hit 135. Okay, here the price of B was 150. It has come to 135. That means there is a drop of 10%. Okay, the market capitalization has to be reworked. How do you rework it? 260 is the new price into number of shares plus 135 into outstanding number of shares. So now the market capitalization of these two companies is 530 lakhs. That means due to change in the price, the market capitalization has moved from 500 lakhs to 530 lakhs. indicating a 6% increase. Hence, the Sensex would move from 100 points. You add the 6 points to this, it becomes 106. Are you able to understand? This is a logic that has to be extended to all the stocks to calculate how Sensex moves. Any doubts in understanding this, please tell me or read through this once again. I will wait for a couple of minutes because understanding this is very important for you. I'll just wait. Please read through this. If you have any doubts, I'll clear it.
Yes, sir.
Yes.
S- Sir, we have to consider both the shares, sir, while
Yes, you have to consider both
is
the shares.
increased by. Okay, sir. Because if we consider B share, then it is less by 10%, sir.
Yes. Yes.
Yeah. Okay, okay. So both the share, if we consider, then we get the increase in the shares by 30.
Yes.
Like 530 lakhs we get. Okay, sir.
Both, both the shares. If
Yes, sir.
there are 10 shares, you have to consider all 10 shares. If there are 20 shares, consider all 20. If there are 30 shares, then you are constructing the index or CSC.
Yes, sir.
Yeah. Any other doubts? Yeah, please tell me if you have any other doubts.
Sir, why it is multiplied by 1 lakh and 2 lakh? Is it number of shares?
See, it is clearly said, Narayan, that it is A has 1 lakh shares.
Okay, sir. Okay.
Okay, and B has 2 lakh shares. Okay, I'll just add one more thing.
So 200 means it's a price of share, right? Price of per share.
Yes, market price of A is 200. Okay, and I think now it is clear. Any doubts here?
So those are free float shares, 1 lakh and 2 lakh.
You can consider them as free float, no problem. Because I have not made that distinction here. In the next
Okay, sir.
couple of slides, I will make those distinction. See, in this particular slide, what you need to know is why 100 basis point is considered. And when we say that market is up by 10%, market is up by 5%, here the market is up by 6%. Can you see this? Market has gone up by 6%. Means what? Company
Yes, sir.
say that 6 points or 6% has to be added to this particular value. So it becomes 106. Day after tomorrow, if it comes minus 3, what do you need to do? From 106, you have to minus 3. It comes to 103. Clear? Okay, now we'll go to the actual calculation of the index. This is a rough example I'm taking. There I considered only here I consider only 2 shares. Here I'm considering 5 shares. Okay, this is a hypothetical example. Please don't consider this seriously. This is a very hypothetical example. See, I have 5 shares that are listed in my stock exchange. I have only 5 shares. I'm going to construct an index for all the 5 shares. Okay, these are the names of the companies that I have. Okay, and this is the price of share as on 1st January 2020. Okay, so this is the price of all those shares that I have. Okay, on this date, these are the number of shares that are available. Okay, so 20 shares are available, 20 lakh shares are available, 12 lakh shares are available. So all these figures are in lakhs. So these are the number of shares that are available. Remember, this is the price on 1st April 2020, and this is today's price. This is today's price. Okay. I am asking you a question. How do you calculate the index? How do you calculate the index? Right? What is the first step that you will do? Rohit, what is the first step that you will do?
So today's share price into
No.
number of shares in lakhs.
No, no, no. What I will do, I need to establish a base, right? I need to first establish a base. So this year date, I will consider it as a base, right? So what I will do first, my first task is 150 share price of this particular share AB into number of shares. I will get market capitalization as on 1st January 2020. So I have to multiply these two, then multiply these two, next, next, and next. And when I do it, I have to take a total of everything. So that is the market capitalization that I have as on 1st January 2020. Whatever answer I get, I will assign a value as 100 to it. Clear? Whatever value I get, I will assign a value as 100 to it. Next, what will I do? I will multiply 650 into 20, 450 into 12. I will multiply these two. Whatever answer I get, I will take a total of it. Okay, and then I will compare. I'll show you the calculation how it works here. Can you see this? Is it visible to all of you? I'll just make the font a little bit smaller so that you can see it. See, this is the old stock price. This is the price that was available to me on 1st of January. These are the number of shares that were available to me. I will get old market capitalization. How did I get this? 150 into 20, 3,000. 300 into 12, 3,600. So I got the values for the old data first. And when I got this, I took a total of all these values. When I took a total of all these values, what did I get? I got a value as 18,800. I got a value as 18,800. Clear? Next, then what did I do? I calculated the weights. I calculated the weights. How did I calculate the weights? 3,000
divided by 8,800.
3,000 divided by 18,800. I got the answer as 0.16. Check whether I have this answer is correct or no. Use a calculator, check it and tell me whether this answer is correct.
Yes, sir. 0.159. It is.
0.159. Okay. 0.6.
Yes.
Okay. Yeah. Narayan, do it for the second one. Divide 3,600 by 18,000. Divide 3,600 by 18,000.
0.2.
0.2. Okay, 0.2. I have taken 1.19, so almost 2. Fine. Narayan, Narayan is done. Rohit, do it for the third one. Rashmi, do it for the fourth one. Mrinali, do it for the fifth one.
So fourth one is 0.16.
Fourth one is 0.16.
Yes, sir.
Third one is
The third one is 0.38.
Are you getting this
So
answer?
yes, sir, it's correct.
Okay.
Yes,
So
sir.
what are these? These are nothing but weights. These are the weights of this particular shares that we have. Remember, I had shown you in the previous slide, in the live market, I had shown you that how weights are being calculated. You saw the weights there. This is how weights have been calculated. So I'm just showing you a demo as to how weights are calculated. And then what do? You come to the next calculation part. We have to determine the value. And how do we determine the value? Price into weights. This is the price into the weight. Price into weights. Whatever answer you get, you write down that answer. Rohit, calculate this quickly. 150 into 0.16. Priyanka, calculate the second one.
So the third one is 171.
Getting it, all of you?
Yes, sir.
Okay.
Yes, sir.
So when I did all this, I took a total of all this. And what value did I get? 296. When I took a total of all this, the value that I got is 296. Clear? So 296, whatever answer I will write this 296 is equal to 100 because I have to put a value as 100 for this. So I'll just write down here for my convenience sake. For my convenience sake, I can just make a calculation as this 296 that I've got, I will equate it to 100. Next, I take today's price. These are my today's prices. Okay. I multiply today's price into the number of shares. I take today's price and I multiply with the number of shares. I get the new market capitalization. I take a total of this and then I again find out the weights. Okay. And after finding out the weights, I multiply again the price into weights. I get 525. Now you compare. Okay. By what percentage this value has grown? By what percentage this value has grown? That is your index calculation. Okay. Which means what I will do, what is my growth or what is the change that has happened? 525 minus 296 divided by 296 into 100. If you just do this, see what you get. I repeat, 525, somebody can please try it out. 525 minus 296. Okay, whatever answer you get divided by 296 into 100. Just do it.
77%.
77.
So market has gone up from 1st January 2020 till yesterday. Market has gone up by 77%. Okay, so which means if 296 was equal to 100, just make a note here so that things are clear to you. So I'll just assign 296 is equal to 100. I've given a base value and then you said that market has gone up or the change that has happened is around 77%. What does it mean? It means that compared to 1st January 2020, the market has gone up by 77%, which means if I have to find out in terms of base value, it is going to be 100 plus 77, which is today my market is at 177%, my 177 points. Today market is at 177 points. Are you able to understand this logic here? Getting it?
Yes, sir.
Yes, sir.
Mrunali, Rashmi, all of you, if you had invested, let us say 100 rupees in 1979, if you had invested 100 rupees in 1979, okay, today that 100 rupees would have become 33,000 rupees. Why? Because Sensex today is at 33,000 rupees, 33,000 points. Okay, I'll just get the exact figure, whether it is 33 or 31. I'll just tell you exactly. Yeah, in fact, the market is at 39,000. Okay, the market is at 39,000, which means imagine if you had put 100 rupees today, that 100 rupees would have become 39,000 rupees. See how many times your value has grown. Just imagine, I'm just giving a very hypothetical example. Imagine if your parents had invested mere 10,000 rupees, mere 10,000 rupees in 1979. Okay, 10,000 rupees in 1979. Today that 10,000 would have become 10,000 into 39,000. Just multiply and see. That would be the value that you have earned. If you can just make this calculation, try it out. 10,000 rupees into 39,000 rupees. You leave apart that 39,600 other things. Just multiply 39,000 into 10,000. don't think the value will fit on the calculator also.
So 39 crores.
39 crore.
Rashmi, your parents would have earned 39 crores if they had invested 10,000 rupees way back in 1979 in.
Yes, sir.
Got it? So value,
Yes.
money can be earned in this market. It is not that you can't earn, but yes, there will be pitfalls here and there. So you have to take care of it. See, Rashmi, it's very simple. When you're earning 39 crores, you should sacrifice also something. Everything will not be a sweet cakewalk. So some bad times, some bad things will definitely happen. But overall, you gained a substantial amount of money. So that is what I want to tell you, that this is how the index has been constructed. And if you had invested long time back, you would have earned a substantial amount of money by this particular time. Getting it? So this calculation that I just showed you today is called price weighted index. The calculation that I showed you right now is called as price weighted index. In the next class, I will tell you free float market capitalization index. I'm just showing you one part today. In my subsequent classes, I will tell you what is free float market capitalization. But before we go to that calculation, it is very important for you to understand what do you mean by free float. Just go through this, okay, and then I'll explain to you what is free float market capitalization. Quickly go through this. I think it should be visible. Is it visible?
Yes, sir.
Quickly go through this. Can go through this example. I think if you go through the example, things will be much more clear for you to understand. Yeah. So the remaining part we shall see about what are the different types of market capitalization. I just showed you a demo of, I showed you a live market demo of price weighted index. I showed you how to calculate a price weighted index in this particular chart or the slide. In my next class, I'm going to tell you how does free float market capitalization get calculated, and a live demo of how free float market capitalization is been computed. Clear? So these two are there for your syllabus. There are other things also, but they are not forming a part of your syllabus. I will restrict my discussion only to price weighted index and free float market capitalization index. These are the only two indices that are applicable for you. Clear? So before that, I'm going to stop here. I'm just taking the attendance. We have 23 people.
So you're going to take the afternoon class also.
No, afternoon class.
So investment.
Today, I had my afternoon class, but because MB Patil sir is not there, I have shifted my class in the morning session.
Okay, sir.
So afternoon class, I will not be engaging. That class itself, I have taken it here.
Okay, sir.
Okay. Fine. So there are 23 people. I still find a lot of people not attending classes. A lot of them. Okay. Please ask them to attend. Otherwise, it will create problem for them. So just ask everyone to report to class on daily basis. Okay. I think I'm done. So thank you very much. We'll see you tomorrow.
Thank you, sir.
Thank you, sir.
Sir will be engaging the next class.